Oh, hello, this is Amy from iTradeAIMS.net, AIMS Stress-Free Trading. Today is the 26th of April and it is time to do some review. Before I go into the review, don't forget, if you haven't joined, we have the Platinum membership going on, 75% off, which means 75% off everything. And if you're interested in joining us in our Discord group where I trade and share my entries and stuff, and we talk about stuff and all that, it's $50 a month usually, but with this it will be free, so it'll be included into it. So it's all the premium plus the monthly subscription included into it, one payment, and you don't have to pay again. So that's the Platinum membership. Go to iTradeAIMS.net and get it there. So today was a really kind of interesting day. We saw what happened previously. So this is not how it began. So let's go to the London Open. So I like my template, red, green and slate gray. Even themes have effect, you know, whatever you're used to, you get familiar with it. But every now and then when I'm trying to learn something new, I change the theme so it shocks my brain. So for example, I was in this format today. Yeah. So anyway, this is where London Open started. The first candle on the 5-minute chart was obviously the one that had more bearish move and less, more bearish move, because at one point it was a bull candle all the way there, but then it turned around. So I did something really stupid here. It's like, okay, the strong markets were last week on Friday and stuff, and I was still in that same mindset or something like that. Let's go to the 1-minute chart. So here you go, that's that first minute. So when you see that the first minute candle is a bullish candle, but the range is just 5 or 6 points, then you can't really assume that it's a trend day. It has to be like 15, 20, something like this, the first candle, and then you can so that's the breakout candle. This is not considered as a breakout. So London Open breakout trading, that's low bot. So this is how I define a breakout. A breakout is not just a breakout of levels. A breakout can be a candle on its own, right? So let's go to the M5 again. So on the 5-minute chart, if you look at it, this is definitely not a breakout, and it's done one bad thing, that is that it's gone on both sides of the London Open. Okay, they keep disturbing me, so I keep pausing the video. Never mind. Like I said, I'm doing these videos straight off, and I'm not going to do editing and stuff like that, because that's not the point. We just need to get the point across. So bear move, further down, bull move. Now that is a good bullish candle. After that, what you can do is that you can go long straight away at the break, provided that you have something on the left. So let's go to the hourly chart and see what's happening there. Right, so I had these levels. I was talking about this. I had this level as well. So I saw this, and it closed right at that level. And the mistake I made was, now that you see that it's closed right at the level, not above the level, there's this wick is telling you something. Something is wrong. This is the spot where bears took over, and they did take over and took price all the way down. But the bulls took the created pressure here again, and they started to work against this. So as you can see, you have a triple bottom kind of situation here, 3 candle lows, and then after that it started to go up. So if you went long above this, you can consider this as a pullback entry, and it's not bad. If you saw this candle, it is a trend bar because it closes all the way up there, and it doesn't have a big shadow or wick. So but the thing is that if you go long here, you know what's waiting for you. So that same thing, as you can see, one hit, second hit, third hit, one hit, second hit, third hit. So what is this? This is a range inside. So let me just mark that. Let's give me some background, please. Let's do my favorite color. Do that. And now we go to the 1 minute chart. What do you see? See those levels here, and then price goes up, hits those levels. So it is a range bound market, but it's a tight range. So you cannot really trade inside it because you can't even scalp for a 10 pip on this. So this, you need to avoid this, and I need to avoid this. But anyway, if you went long here, your stop loss cannot be anywhere but below this level here. And now you're hoping for that it goes and hits that and clears it. So this wouldn't be fun because you'd sit here and the price would go up and down and up and down and up and down, and then finally it will break. So in hindsight, it's very easy, very clear. I should have just gone long here and then got out there or exited here. But that's not how I did it. I was going mental, buying here, selling here, buying here, selling here, and exactly the opposite of the lecture I was giving everyone not to do it. But anyway, sometimes it happens to me. What stops me is like when I look at the terminal and I see, oh, I'm 2% down. That's it. It kind of makes me scared, and then I start making different decisions. So I kind of stop. So that I took a pause and then came back to it later. I saw this comes down, as you can see, same levels, hits those levels, breaks out. So around here, I managed to actually, on the close of this, and this was a mistake again, on the close of this, I went short. And I forgot about these again. So again, you have these levels and it closes right at it or just below it. That's not the point. That's not the spot to close, to go short. But that's fine, because when I went short, it did not really pull back. My stop loss was up there anyway. And as soon as this candle closed, I went short again. Unfortunately, this did not last too long, but by this time I was in the mode of recovering my losses from there. So I took, I think, a couple of scalps on this. And then I waited for this zigzag pullback. And this is my favorite setup. As you can see, these lows, those same lows, let me just draw them again. These, and then this cannot happen. So I put a pending order there, stop loss only 10 points. So this type of entry is far better than this, because here you'll be proven wrong. The earliest is above this candle, so you have 20-point risk, but ideally your stop loss has to be all the way there at 36 points. So that's a difficult trade to take, but this one is a lot easier, because now you know that if you take a trade here, although your stop loss technically has to be all the way up there, you know that you have some reason here that if price was to go above these levels, then things are changing. So for that reason, stop loss was only 10, which allows you to take a bigger position, or at least you have technically a good risk reward trade. So entered here, entered at the close of a trend candle again. Here was another entry available. Two entries were available. One was limit sell. So when you see 3 or 4 trend candles and there's one candle trying to break it, at the close of that candle, you can actually go short or have a limit order and go short. Or if not there, then you go below this candle. That's the pullback candle. Remember, the one candle pullback on the 5 minute is going to be a beautiful pullback. So let's go to not the 5 minute, the five times lower time frame. So if this is M5, let's go to M1. I've marked it with that line. Where did the line go? Here it is. Here you go. So that's where the breakout happened, and that's your pullback. So the 5 minute candle, which was the pullback candle, obviously has 5 candles inside. So you have 1, 2, 3. Now this is parts of the pullback happened within that candle, and parts of the pullback happened in the next candle. See, within this. So if I put the line here, then it would show the end of this candle. So yeah, I was wrong. I didn't. Parts of it didn't happen in the other candle. 1, 2, 3, 4, 5. These 5 candles are actually one candle on the 5-minute chart. So this is a great pullback entry. If you took on the M1, it would be similar as if you were taking this trade. This trade here, it would be exactly the same thing. And then it went down, and because I had to cover those losses, I had 3 entries on this. I will show you in a bit. I took profits on 2, and then I let the other one run by using the swing lows as my stop loss. So at this point, when the trend candles happen, and especially at the end of this, that stop loss was perfect to be there. And then when this went further down, these 3 trend candles, and this became my swing high. And I kept my stop loss there because, you know, all of this happened, and then later on it closed me out. So that's one good trade here. Some really, really bad trades here. So bad over here that even these lovely trades did not recover those losses. And after that, DAX didn't really do much throughout the day. So I'm using the M5 chart, and I'm using it not only because of the, you know, the lockdowns and everything that we've gone through, but there's been a transformation in myself, like, because if I like to trade, I sit around, and if you are on the M1 only, it's going to get you tired, and it's not going to be always tradable. But if you trade the 5-minute chart, you can actually trade it all day. And the reason I used to not trade the 5-minute chart was I used to always say, oh, M5 is an all day thing. So I didn't want to do it. But nowadays I do want to do it because I'm using this method and I want to perfect this because this is more robust and more powerful. Anyway, so now let's go to screenshots. So this is one of that trade that on the hourly chart, that same trade, I took 3 positions here. And I was visualizing this, thinking that if I were to run this, you know, let it run on the hourly chart, and if it were to be that bearish day, then we have a few reasons to consider that. One is this zone here, as you can see, price came to those levels, crossed these, but could not cross those, got a reversal, trend candle down, this went up, hit those levels, but were rejected. It's going down. So at this point, it appeared that the only thing that would probably stop it is these levels and these levels. So let's see if it gets to that level. And if it goes past this, then we could probably look to take profits here. That would have been an epic, beautiful trade. If it's happened here, it could happen here. If these can happen, this can happen as well. But obviously, you can never be sure whether it will happen or not. And now we know that it didn't. So that's that trade that I was talking to you about. I wanted to go short here. I actually wanted to go short here, but then I got late, and then either I got slipped or I was a little bit even further short. Anyway, these are my 2 entries, 1, 2, and that's the third one. And I think the third one was based on this limit order. Yeah, it came back to it, and I went short. So we saw this, and now we will see how it went further on. And this is that the one candle, as you can see, this one candle here, inside it there was this pullback. So if you look at this, this was a perfect pullback entry. So you can do a limit order, or you can do, you know, go to the M1 chart and take a pullback entry there as an add-on, and then come back to the M5 chart. So there you go, that was that. Some people took this on the M1. If you were to use my normal 10, 20, and 100 MAs, then on M1 it looked like a perfect entry. You have the 3 moving averages going together, sideways market. It breaks out. The 10 and the 20 opens them out. This is gator, so the gator kind of opens. You have a let me do a quick Elliott wave count for you on this as well. Let's see. So you have 1 here, or maybe 1, 2, and that's your 2. This became your 3, that's your 4, and this is you going into a wave 5 down. So some people are asking if I'm doing price action and stuff. I know I'm doing price action, but I also know all of these, you know, wave counts and stuff. I've done it for so long that I don't really need indicators for it. I can see it. So every time I look at the chart, I can actually count those waves within waves in my head. And anyone can learn to do that. So here we see that that move down, the 3 and the 4. This is that ABC pullback. Let's mark that as well. Okay, text color, fill, numbers, ABC. There we go. That's A, that's B, that's C. And if we go back to the numbers, we will have that 1, 2, 3, 4, and that's your 5. So based on that, it was a pretty good exit over here. You have support levels right in front of you, right over here, and then this was not a bad spot to exit, or at least take profit. And I'm also referring to, all the setup ones. Almost all the setup ones are actually flag setups, flag patterns, and this is the zigzag one. This is the zigzag pullback pattern, and if you put the Keltner channel on this, then that way it would see, and I think I have a slide about that as well. This would be your first spot where it goes out of the channel, then this is your pullback, and that's your entry. So this was the entry of the day. I mean, if you can just catch, ideally I should have waited through this, and then, I mean, the most ideal thing would have been that I should not have traded all of this rubbish. And then when I saw, with all those reasons that we discussed, when I saw this trend move and then a pullback, and if I just took these 3 entries and took profits here, I would be about 2% up today. So here you go. Those are those entries. One here, one there. I took profits on trailing candles, and then I let the rest run. I was hoping that this one I would convert into a swing trade and let it run on the hourly chart, but that didn't happen. Okay, like I said, okay, so these are all the screenshots that I actually share in my Discord group with the members who are there, so they can also see what I'm trying to do during that day. I think around this time, my thoughts were that if you're swing trading, and that's what I wanted to do today. It was the wrong day I chose, but I mean, if I want to swing trade, that means that I want to stay in trades during these pullbacks as well. So I should have held those ones. I had those shorts here, right? So this was good shorts. I got out, but the idea was actually to catch this move, and I got out quickly, and that is because of the psyche of making mistakes. I was nervous because I broke my rules and stuff like that, and I lost money on this, and that kind of weakened me. So I got out here trying to cover the losses, but ideally I should have just held these, and then when I pull back, I should have added on here and here. So then that way probably I had 4 or 5 positions in there, so it would be very heavy. But anyway, that's how it goes. So also I was doing some, sharing my ideas about trend lines and stuff today in the chat room. So I shared this screenshot. As you can see, this is almost every trend, not almost, all the trends will have some kind of a channel. It's going to be either a tight channel or a broad channel or steep channel and all of that, but they will always have a channel, right? So this one is contracting, and as it contracts and it breaks the channel, that's where you know that the trend is changing. If you don't use a channel, price action, then you have your moving averages and stuff, and then price goes on the other side of the moving average, you know that something has changed now. Right. Meanwhile, we also did some trading on the Forex, and this is Euro USD. I saw that it did some sort of a, let's say, a 1 and a 2 here. So sold here because this is a bearish candle. There was some support, but I thought maybe at least it will try this region here, and it did that. So we took profits on that there. As you can see, this is that same euro dollar chart, but if you had the Keltner channel, then this would be your reversal kind of candle. So it comes, hits the 20 EMA, pulls back, and then goes down and hits the extreme of the band. You close your trade and run. There was also a lovely setup on the hourly USD CAD, but I did not take it because this did not come out of the channel over here. So if it had come out of the channel and then it went back But in hindsight, I was monitoring this because of this move on the news the other day. So I was monitoring this since last week. It stayed a couple of days sideways, and then finally it did this. So I should have taken it, but I missed it. I was too busy destroying things on DAX M5. So this is an interesting dollar yen chart, and I've marked it with different points. So let's go point by point. This is very interesting. So the low of a bear trend leg, that's the trend, bear trend, that's the low of it, right? And then you wait for it, and then the next day you saw that pullback, and as you see these trend candles that move below it, then you know that this is your swing high. So that becomes your first and your second point, right? So the third point is when this swing actually ends and starts to go up. So after this candle, this became your third point. So at least you now had 2 points where you could draw your trend line between this and this. So after this, we haven't touched the trend line. This happened automatically. This overshoot happened on its own, and these two happened on its own, right? This over here, fourth, this was actually the spot for a trend line, something like, let's just use arrow. So at one point you would have your trend line like so, because you have point 1, 2, 3, and 4. But then it comes and breaks that and creates a new swing. And before it does that, it actually bounces against the trend line. Remember, you have not touched this line. You haven't changed it. You have these 2 points or these 2 points, and then after that it's just sitting there on its own, and price comes and hits it, validating it that this trend line is actually pretty good at the moment. So 3 touches, price goes up, and as it starts to come down around here, you now know that this is your swing high. And because the fact that it's actually higher than this, you will stop using this trend line. You would actually draw another line, which is this one. So after this point 6, you have not touched that line. It's just there. So on Friday, when I tried to break this level and immediately reversed all the way up, I had a smile on my face because I knew that the trend line has worked, and a long over here will automatically have had because this line was already in place, so you automatically had a beautiful exit point for the day on that. Not that I took it, but this was a very good trade available on that. Today, however, was even better way to go long on UJ over here, either at this spot, and if you didn't go at this spot, obviously that was not an ideal, but it went up and came down and touched it again with a doji kind of candle. It became a beautiful spot to actually go long. And then after this, I thought if it does this, goes up and kind of comes down or takes a pause, I will go long on it again. So I did go long on dollar yen. Let's actually go to the other chart and find out if dollar yen actually did go. So where is it? So here we are. That's that chart. If you were to draw those lines, you would have used this line here first, and then when you saw this, then you would use that line. You see, if you were using those lines. But if you started your lines from here and then you adjusted them to that one, then you have this formation going on. That's the thing with trend lines. It's discretion. You can do whatever you want with them, right? So it's not that they have such great predictive value in it or something like that. It just gives structure, gives you structure so you can think about things correctly. So yeah, this is where the long happened around here. Scared us a bit, but stop loss is all the way down, so it went up, but it's still in that range. So I think what's more important than trend lines is actually support and resistance lines. I actually use lines more than trend lines. I'm just messing around with trend lines these days. Anyway, let's go back. So that's that. Here's another example of a narrow trend. As you can see, this is a tight channel. So you have price going up, down, up, down. So these were all pullbacks that could have been taken, but this is where price would have stopped. Right. So while we were doing that long and short on the DAX, I did not look at UK 100 or FTSE 100. It gave us beautiful two pullback entries. It doesn't move that much point wise, but if we got one of this, it would have been very easy to let it run. Okay. The Nasdaq meanwhile created a fantastic entry on the hourly chart. As you can see, you have a strong bull trend there, and then overnight and over the weekend you have ABC pullback, and then so this is a flag pattern, right? This is the bull flag, and then you have the confirmation candle. Outside candle closes above the high of this, go long at the close of this candle and let it run. And I think it was a lovely trade that could have been managed easily. As you can see, so right now we see the we're going towards the close of the New York session, and this is usually what happens. Let's have a look at US 30. Here we go. On US 30 we have a very strong drop down, and so I had a bet on the hourly chart from this area here and stop loss up there. So right at the close, that bet has become really good now. So instead of making this review, had I been looking at it, I had a beautiful setup one short on this available for me. So setup one short would be, this is your 3, this is your 4, this would be your trade down. Let's have a look at the Nasdaq again for that purpose. As you can see, that's that 1, 2, 3, 4, 5, and yeah, where's my target zone? So if this is your 3 and this is your 4, then that was your target point, just short of target point. It actually, so that's what I was showing you in that other this one here. Let's go back. As you can see, this was your entry, and I posted this in the chat room. Even entry was even available here on this candle. So that's that candle, and it never looked back. So even if you're trailing candles, you would only exit now. Right then, let's go to the next screen. How many are left? These are some from earlier. Let's have a quick look at US 30. I think the only good setup on US 30 today was this setup that you could have traded using the KC method, where we have the 1, 2, 3 pattern. So point 1 is when it pokes, goes beyond, or just pokes the extreme of the band while it is looking bearish. And so here you start looking for that pullback. You have this clean pullback. Price takes a pause here. You go short, stop loss at above this candle, and you target number 3. And this trade you could have actually let run the rest of the day. So yeah, this is one of the trades I wanted to talk about. I am proud to say that I took this one. We have discussed this earlier, but it was not enough to cover my losses in this. And then I made it even worse when I traded US 30 later on, and I traded really, really wrong. So this method is really sweet. I really like this one. Just put the calendar chart channel with 2.25 bands on each side, and wait for price to do a volatility breakout like this. Goes out of the candle, goes out of the channel, then pulls back, comes back to the center, wait for the confirmation candle like this, go long, and then when it goes out of the channel again, that will be usually your exit. And that's exactly what we have seen today. So beautiful, beautiful trades. These are some on US 30, yes. That's that trade that we saw on the KC here. I think this one here, yeah. So if you look at it on price action, you have these points. So first you have point number 1, and point number 2 was a trend line for the time of being, but it will be then deleted, and you would create a new one here. So this is your point 1, this is your point 2, 3, and 4. So you would connect these two lines, and then first you had to connect to this one, but when price went above this, and started to come down, then you can use 1 and 2 here. And then, you know, you can see that if you took a short here, this was your channel. So this channel, either you draw your own channels using trend lines, or if you just use the Kelton channels or the 1020 EMA or the alligator, you can achieve similar kind of results with both of them. So that's today's review. I think it went a little bit longer today. I was quite upset earlier because I lost more than 3% of my account. That usually doesn't happen, but today I went a bit crazy, and then I wanted to recover it, and I went further down, and then I took a walk, and then I came back, spent an hour, did some dinner, and then I went for a walk again. So I took some more pictures of the sunsets, and now I'm doing the review very late, so I will upload it now. And meanwhile, before you go, hit that like button and stay subscribed to the channel. See you all in the next video. Don't forget the platinum.